What if the coin you've been mining for years is on the verge of collapsing or exploding? May 2025 could be the turning point for Pi Network, but not in the way you think. With millions of users growing impatient, a collapsing price, and massive token unlocks flooding the market, will Pi finally deliver on its promise, or is it quietly slipping into irrelevance? Some say this is the calm before the storm. Others believe it's the beginning of the end. In this video, we're diving deep into the hard facts, real data, and potential lifelines that could save or doom Pi Network in May 2025. What happens next may shock you, so stay with me till the end. Let's take a step back and look at what Pi Network once represented. For years, millions of users mined Pi on their mobile phones with the dream that this coin, born out of a simple tap-a-day habit, could one day rival Bitcoin, or at least stand as a fairer, more accessible alternative. The core idea was genius. No expensive mining rigs, no tech knowledge required, just community, simplicity, and a promise of future value. But now, after all the years of anticipation and the long-awaited launch of the Mainnet, the hype has quieted. And the reality that's setting in is much less exciting. As of late April 2025, the Pi coin is trading at just over 60 cents. That's a steep drop from its short-lived high of $3 shortly after the Mainnet launch. In just the last month, Pi has lost around 15% of its value, and it's not just a minor dip, it's a pattern. While the broader crypto market is heating up, especially with Bitcoin pushing upward again, Pi is slipping in the opposite direction. That divergence is making even its most loyal holders uneasy. Many early believers feel stuck. They mined Pi every single day, invited friends, built communities, all in the hope that when the Mainnet came, they'd finally see the reward. But instead of riches or even modest gains, they're seeing red. And it's not just emotional frustration, it's rooted in real economic and structural problems. One of the key issues is that Pi still lacks exposure on major exchanges. Without being listed on large, regulated platforms, the token remains inaccessible to most potential investors. It's hard to trade, it's not easily liquid, and for many, it still feels trapped in a closed ecosystem. And because of that, its potential to grow is severely capped. Add to that the issue of real-world utility, or more accurately, the lack of it. A token without a use case is just a digital placeholder. While Pi's vision of becoming a global currency is admirable, it hasn't yet materialized in any meaningful way. There are a few merchants and platforms that accept Pi, but it's nowhere near the level required to drive sustained demand. Without everyday usage, people are left holding an asset that feels more speculative than ever. Liquidity is another major pain point. There simply isn't enough volume or trading activity to support even moderate sell-offs. This creates a situation where any surge in selling pressure can tank the price. And unfortunately, that's exactly what's happening. According to BitGet Wallet COO, Alvin Can, Pi's initial wave of excitement came from its innovative mining model and viral growth through referrals. But now, that early momentum has worn off. The project is struggling to capture new interest, and the energy of the early community is fading. The charts aren't offering much hope either. The Chaikin money flow indicator, which shows where the money is going, is suggesting that while some capital is entering the ecosystem, the majority is leaving. Sellers are clearly in control. The Relative Strength Index, or RSI, is hovering around 38, dangerously close to oversold territory, indicating that people are rushing to offload their Pi holdings. The MACD, another important momentum indicator, looks like it's about to flip negative, a sign that even more downward pressure could be coming. Pi's price has been trading in a tight sideways channel between 59 cents and 67 cents. And unfortunately, it's now testing the bottom of that range. If it breaks below, analysts warn we could see it drop to $0.5192 or worse, all the way back to its all-time low of 40 cents. This is not just a theoretical possibility. It's a very real threat, especially when you look at what's happening behind the scenes. In April alone, over 21 million Pi tokens were unlocked, worth more than $12 million at current prices. And this is just the beginning. Over the next 12 months, the average monthly token unlock is expected to be around 131 million. That's an overwhelming amount of new supply entering the market. Without an equal or greater increase in demand, basic economics tells us what happens: the price falls. And fast. What's even more concerning is the lack of countermeasures. The Pi core team hasn't introduced any significant token burn mechanisms. Without a burn to reduce the growing supply, or some kind of strategic update to drive demand, this selling pressure could become a permanent feature of Pi's market dynamics. Despite all this, not everything is lost yet. If Pi can somehow break above the 87 cents resistance level and hold it, we could see a reversal begin. That would show renewed confidence in the token, attract technical traders, and potentially give the community a much-needed morale boost. But hitting that target won't happen without serious changes. Pi Network needs to evolve from being an idea to being a functional part of everyday life. It has to offer something that people actually need. The project needs to focus on creating true use cases, ways for people to spend, earn, and benefit from Pi in real terms. Retail integration is one path forward. If Pi can be accepted at restaurants, online stores, and service providers, it starts to build the kind of ecosystem that gives it long-term value. Another promising area is decentralized finance. Integrating Pi into DeFi apps could offer staking, lending, and borrowing opportunities, tools that give people a reason to hold rather than dump their tokens. These functions can create natural demand and reduce selling pressure. And of course, getting Pi listed on more reputable exchanges would give it a credibility boost and open the door to new capital. For now, though, May 2025 isn't shaping up to be the month when Pi skyrockets. It's looking more like the month where Pi has to mature or risk losing everything it's built so far. This is the make or break moment. Either Pi Network evolves into something practical and valuable, or it becomes a cautionary tale about hype without substance. The community still has a role to play. If users push for development, demand real utility, and hold the core team accountable, there's still hope. But if May comes and goes without progress, the window might close for good. So the big question isn't will Pi moon in May? It's can Pi survive May? The answer depends on what happens next and how committed the team is to turning vision into reality. Thanks for watching. If you've mined Pi, invested in it, or are just curious about where this ambitious project is heading, now's the time to pay attention. What happens in May could change everything. Don't forget to like, subscribe, and drop your thoughts in the comments. Do you think Pi will survive this critical moment, or are we witnessing the beginning of its decline? Let's talk about it below.